Hello, everyone. Welcome back to the Rational Investors Daily Brief Recap. We'll try and do this in about 10 minutes here this morning. It's Monday morning, of course, nice and quiet. Dog days of summer, as we were talking about in the Daily Brief today. Probably, good general thinking here. When we start getting into late August, remember that most of the professionals are in the Hamptons right now, partying it up. It's going to be just like the absolute diehard, and unfortunately a lot of sort of new people to trading that really want to get rich quick that are actually going to be trying to push too hard here through August. We'll know, once the pros come back after Labor Day. Usually we give the market a couple weeks to sort of settle down following that to actually see what the fall is going to really look like. Having said that, quick boo at the markets. As always, U.S. dollar index did finish nice and strong last week. We talked at length through the week about potential empires that never did come in. We actually closed the week higher here. Lots of sort of economic malaise coming out of Europe and Asia. European currencies just look horrible right now. All still pointing lower, and we talked about that in the daily brief here this morning. The general message here is, if we change this to a line chart, should make sense. Show me a new high, and I'll show you a buy. I couldn't go and invest in U.S. dollars up here. I'd have to wait for some sort of correction or consolidation. But nonetheless, still pointing higher, and we should all be aware that the central bankers have sort of their big sort of summer fiesta party in Jackson Hole, Wyoming. And that's sort of the big fundamental driver this week, in particular with the United States. There's not a heck of a lot of econs coming out, but people will be watching for how Mr. Powell presents. Does he talk about interest rates, those kind of things up at Jackson Hole? My hunch is he won't, but nonetheless, that's what the market's going to be focused on here now in the short term. Moving on, stocks, you can see massive tails over the past couple weeks, suggesting that there is buying interest in the stock market down against these lows. We talked lots about options expiry through the end of last week. And interestingly enough, on the site, we've been really following some interesting cycle analysis recently, and we're actually in a window where if the stock market was to rally, this is actually where the rally should start. And looking for some sort of cycle peak market top into the middle to the end of September. It's interesting too, we did a not really a cycle but more of like a Gann analysis of sort of Gann time frames, what a correction in something like Bitcoin would look like, and that also is suggesting near the end of September we actually should be looking for our dump. And so talking about stocks, I actually do like the idea that the stock market, the news out of the global sort of economy is things are very weak in Europe and Asia, and Europe just announced overnight that they, Germany in particular was going to throw something like $100 billion or maybe it's $50 billion, some crazy ass number at the market to try and support the economy. And gee whiz, the stocks, they all just jumped up here out of the gate. Could this be the base for our next sort of cycle rally here into some sort of peak in through the middle to the latter part of September, and then that dump following that cycle peak through the end of September, beginning of October, which would correspond with Mr. Gann's sort of a thesis of a dump in Bitcoin near the end of September? I think on balance that's not such bad thinking. This market, of course, is Swiss cheese. We had tons and tons of gaps heading up out of that June low, and notice how the market came down and filled in quite a few of these gaps. Still some gaps left open. So following this, my hunch is we're probably going to have to come back down, fill in these gaps. And of course, we're only one tweet away from the whole market rolling back over here. So don't be surprised if Twitter in chief has some surprises in store for us. Moving on, on balance, I'm thinking the stocks are bid here, and that cycle theory is kind of thinking the same thing too. Moving on, if we, these are sort of risk-on assets, and I've had this debate raging inside my head now for the past little while. There's no doubt about it, and man, it's getting noisy inside my head here. But where does Bitcoin fit in this world of risk-on versus risk-off? You can see the risk-off assets: gold, yen, treasuries, all coming off here, and I've been warning, in these public videos about how I'm very, very leery about buying any of these risk-off assets up top here. They're looking very, very toppy. And actually risky. How ironic. Risk-off is actually looking risky. And then notice, like we talked about, the stock market here also is oil. Is risk on, back on. Tough to say, but, long and short of it here, we've been following this potential... well, it's not a potential. I think it's in now. We've been talking about this. Where the hell's the damn chart? There it is. This diamond pattern in the gold market playing itself out. And actually, I hate to say it, but it's stunningly cliche. Where we had this big initial dump, rallied back into reload zones, failed, dumped into reload long zones now. And as I've shown you guys repeatedly... if I can find the chart, here it is. This diamond pattern is just playing itself out. And really, I don't think we can actually even draw any major conclusions about, does this thing top out and break down and start doing, 50% corrections and all that kind of fun stuff until this diamond... Excuse me. Until this diamond resolves itself. And interesting how we do have this key trend line that goes way, way, way back. In fact, it goes so far back I can't even get it on the darn charts. This trend line started, how long ago? Way off of these lines here. This double bottom, probably have to look at this on like a daily chart to see it. Yeah, there it is. So basically these double bottom parallel lines is basically defined the upside of this gold move. I think it's going to be a bit of a challenge to get back up top through there. And then, of course, look at this. This is straight line up. Could we spend some time and just clean this up a little bit? Totally. Probably the comment for today's video is just simply that this diamond pattern is still playing itself out, and we can't really make any grand conclusions about the gold market until this is done. Heading on over to crypto now. Lots of fun stuff in crypto, and I'm already one bling behind. Sorry, Kevin. I'm trying my best here. Interesting. This is looking at the 4-hour chart on Coinbase. We had this very polite pullback off of this beautiful little diamond pattern recently. I won't get into the higher time frame, bigger picture analysis today. I did lots of that in the Broiler Chicken show yesterday. I think I ranted on for like a couple hours, so my apologies it was so long. But, we simply talked about, and I showed you just there a moment ago, I'm thinking just very quickly here that this diamond pattern here has to play itself out, and I don't think, we have to do 50% retracements. I'd like to see that happen through the end of September. But in the short term, what I'm seeing, that's that bigger diamond picture. But what I'm seeing here in the short term is we had this fail, and of course this fail was right at that 61.8, good old mountain man level right there, doink. We failed, had to come back down, test the lows, and gee whiz, what a coincidence. We came down and bottomed in reload zone, long zones here. So I'm sort of thinking right now that this consolidation within this bigger triangle is continuing on. Reload zones sort of define our boundaries, bottom of the range, top of the range. And right now it looks to me like we're working our way higher. It was interesting to see that the futures boys coming out of Friday's session had generated a buy signal here, and I'll show you that CME contract here off of this double bottom. And what I noticed was that basically through the weekend, price just stopped. And I wonder whether the powers that be said, look, we got a bottom in here. Don't go and screw this up through the weekend, you crazy crypto kids. We want to continue working this thing higher. Also notice too, right up at that original triangle fail, there's a big old gap sitting there on the CME contract that could very easily be filled in. I had put out a tweet late yesterday talking a little bit about this potential failure looking very similar to this, and if we dump through these lows, then look out below. But and that was, I guess, this tweet right here, potential bearish bots. You can see the M could have come in here, but that didn't play out. And actually, I even put in this tweet something for the bulls and the bears. If the bulls won, which they did, we broke out through the top and back above this trend line. Interestingly enough, we actually have a potential Hogue value trade kicking in here, where if we accept back into value, then 80% of the time we should go up and tag value high, which, as we said on that CME contract, gee whiz, there's a big old honking gap sitting up top there that I think that they want to fill in. See how that lines up with that level really nicely there. And also too, that's an 88.6. So we got, value high off of the lower time frame charts, things like OKCoin, the forwards. There's the breakout through the trend line. Have we accepted back into value? It kind of looks like we have. Jury's still out. I'd like to see higher highs, etc. There is the 50% level off of the entire range, which really should naturally be hit anyway. And then there's that 88.6 gaps on the CME chart, top of value. I'm feeling like we want to head back up top here, and especially if Bitcoin is a risk-on asset and stock market's feeling happier, the risk-off assets, bonds, gold, yen, all start crapping out. Well, that basically is that thesis. To finish off today's offering, I want to take a look at a couple blockchain-related stocks. I'm hearing a lot of positive things about this HUD 8. Everybody in the industry seems to absolutely love this company. I don't know. I mean, I can't, like a value player, I can't really be a value player here. Big old gaps to the downside. This was a V bottom, which sort of leads me to believe that at some point down the road, V bottom, well, actually that was a double bottom, but nonetheless tested. V bottom tested. A V bottom. At some point we may need to test this, but I could very easily see through sort of late summer here, summer doldrums, things pretty quiet, Bitcoin's relatively well bid. I could see a cute little bot setup here actually take us up into the 4.5 area against these original highs. That's sort of thinking as we head into the end of the summer, maybe even into early September kind of idea, that sort of cycle pivot kind of conversation. So I am watching this. Probably best to watch this off of even a daily or even like a 4-hour chart for this setup. One low, two lows, three lows. Interesting how we're right up against this trend line. You might have even drawn the original trend line off of there. So, we're getting nice trend line breakout signals here. 1, 2, 3. Actually, that's not bad. So really your W on the other side of this trend line spits up this lower time frame trade. And there is the bot level. I think a stab up into this 415 area isn't really too unrealistic. And we had on Jamie today on the Daily Brief doing fundamental analysis, and he's reporting that these guys their cost of production is about $2,700 US a Bitcoin. So right now they are very profitable. So there's one idea for you to chew on. We always like to give you a few ideas to chew on through these free offerings. So there's one idea to definitely consider going forward. And then as sort of a value play, I would consider this purely a momentum play right now. It's very strong. As sort of a value play, we're keeping a real close eye on this Riot blockchain. Not too many shares out. You can see how it's right down against the bottom end of its range. Come into reload zones here. And you can see it's waffling. What we'd really like to see here is can we get sort of signs of divergence coming in here? Do we have Willie stupidly oversold? Not getting those signals just yet. So if anything, maybe we're a little bit early on this. If we go down to lower time frames, you can see the div that played out on this rally here. Do we have any div coming in here yet? Just not quite yet. We do have a couple very powerful little trend lines that are probably going to be fairly stiff resistance. You can see the coil that's building, and if you go to sites like, I'm a big fan of this FinViz site. This is another one that we're looking at, DPW, but I won't get into that here today. But this Riot, I do like the fact that it's only got 23 million shares out. Super sexy. Have they stopped the bleeding? That's always the question with these. And with 23 million, if they just run out of cash, they can always do more financing. You can see the street's target's $5, so that's basically a rally back up into these areas. You see the island top, nice gap there. This is what's called a descending wedge. Technically, this is actually a bullish setup. So, if we do get signs of divergence that come in and we get nice W's and stuff, I think actually this is, we definitely have trade location here. So it's just really a question of do you want to participate in the crypto stock market? Very interesting idea to consider here. Still a bit early, I think. But nonetheless, we are definitely in location now. So if we see divergence, if we see W's, then good old Brian's going to be taking a shot here. Okay, I think we'll leave it at that for today. I think I went way overboard on timing. My apologies, everyone, but I hope you enjoyed the broadcast. I think we'll leave it at that. Have yourselves a great day, everybody. All the best, and bye for now.